Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, March the 4th. The year's 2018. Let's talk trading. How to trade like a pro. Failure feedback. Now, there's a difference. You do something and it doesn't work. Is that failure or is that feedback? What is it? The Ben Franklin story about the light bulb, or is that Edison? I can't even remember. He tried, what was it, 10,000 times? And then he finally found something that worked. Was it failure or was it feedback? See, in trading, as I've stated before, it's not like baking. So if you have a method, a system, and you trade it, and it results in losses, is that failure or is that feedback? Maybe you just need to adjust something in the system. Maybe your stops are too tight. You're playing too large of a position. Maybe your timing is off. So don't look at losses as failures. I know we all hate to lose, but think of it as feedback. So one other thing is, when you're analyzing the method, you have to make sure you do it exactly the way you're supposed to. You're not too early in the trade. You're not too late. You're right on time. Your position size is just right. Your stop loss is just right. And your expectations are just right. In other words, if you're expecting to make 100 pips off a trade and it reaches 90 and you don't take the profit and it goes back and hits your stop, that's on you. You have to have realistic expectations. Some traders might say, well, no, it was at 100 and I'd rather stop out than take 90 because... So that's up to you. In my book, if you're up 90, 92, 93, and you're waiting for 100 and it comes back on you and you don't take the profit, that's on you, especially if it winds up in a loss. You could have taken half the trade off. You could have done anything to lock in some of that profit. You just don't give it back. That's one of our pirate sayings, take all that you can, give none back. So just have some realistic expectations. But the message is that start looking at things as feedback rather than as failures. And once again, money and risk management. It's really important. I can't stress it enough. It's what keeps you in the game. And why that keeps doing that. Okay, so what's the feedback here? Well, the euro yen went into the upper wick zone of the previous week's candle, and you see it exited. We know what happens with wick zones. That's the feedback. Take advantage of that. So you see it's 78 pips below the open. And we still have a bunch of pairs that have not filled the gap. Okay, so you see here we're off the yearly high. We're pulling back. Still 111 pips off the yearly open. See that yearly low? I don't know if that was a fat finger trade or what, but somebody really knocked the price down there. Okay, you see here, first day of the month, high low. We cracked through that first day low and we exited. So right now that trade would have been good for 9 pips up to maybe 16. Depends if you already took your profit or not. And you can see here, once again, we're above the first day of the year high. And so this is something that I'm just looking at. We're going to look at this for the year, is looking at the first day of the year, first day of the month, first day of the week. Those opening ranges. And basically, you can play breakouts and reversals through those ranges. And really, it's nothing different if you really think about it. Basically, we're trading off the wicks again, upper and lower. And see here on first day of June last year, there was the open. You see here, price came back down. Big 3-ball. Price came back down. And then looking at the ranges, you see it broke through the low once again. Inside bars. Looks like we might be coming back to that inside bar. See here, we won't have an inside bar. Broke out. And on the daily, 93 pip range, we've got 5 over 100 on the range. And you can see here, once again, breaking out of the previous day's low, right through that lower wick zone. Okay, here was the highest open for the daily right there. Weekly. H1 highest open was put in. There's the yearly H1 highest open. You can see we moved down. We went down through the monthly D1. Actually, this is weird. This is last month's. Guess we need to have a couple of days, unless I have something wrong in the code. What the heck's going on here? Why is that doing that? There we go. Indicator list. I'm going to have to look at something. Oh, no, no, that's right. This was March 1st, so that was the lowest open. And this was March the 3rd, or actually March the 4th. I'm not sure how the chart's going to label this. Let's see. So that was the lowest open. See, we went through that. Now we've got the H1 lowest open this hour for the holo traders. And you can see here we hit the pivot and we hit out a missed pivot. We took that out. Rats, green rats, get prepared. You can see here we've had a turn trade, green rat reversal within 20 pips of the low. Once again, we took out the pivot. We took out the weekly pivot. And here's the monthly pivot right here. In fact, I just saw one of the traders is giving away a free pivot indicator. I got an email this morning. I mean, you can find free pivot indicators all over the place. And just in case you're curious, I modified the SDK pivots. So that was a nice indicator that SDK put out, and I just added a couple modifications to it. One of them being the future pivot. And I forget what all the other ones were. I'd have to look at the code. Okay, so we took out that missed pivot from the previous day. So now in March, we don't have any missed pivots. I think yesterday we had a couple when I made video. Price action, one ball at the bottom, green at the line, one ball at the top, red at the line, three ball at the bottom, looking to go green at the line. Larry live trade. Wick zones, in and out, in and out. And you can see here on just horizontal line chart, taking the trade once again, playing off a price action, just a simple horizontal line cross. It stopped, and it started going back. It's like, do I want to give back those pips? You can always scratch the trade. Here it's going up, and it didn't make a new high. Once again, just maybe a pip or two, but if you make what? If you have 5 trades and you make 2 pips, that's 10 pips. Now, some people are going to say, oh, but, your stop loss is at 10 pips or whatever. And, if I hit one stop, then I got to make 5 trades. And as I stated before in another video, if you're up 7 pips for the day and you've got a 10 pip stop loss and the trade's going against you, look at the portfolio rather than looking at it from the trade. Protect your portfolio. If the trade is going against you, you don't have to let it stop out. If you're protecting your portfolio, that's just not smart. I mean, you're up 7 and you got a 10 pip stop, and then all of a sudden you are going to sit there and go, oh, well, it stopped me out. Now I'm down 3 pips. Oh, that system sucks. No, system doesn't suck. You're just not being smart. You're not looking at the forest. You're looking at the trees. And you can see here, since I've had the computer on, there's been a lot of movement. So that's why the tick chart's so compressed. That's about, 30-some pips of movement. Einstein line. Here you go. Once again, sometimes a little, sometimes a lot, but right there, you get the Magilla trade. I think I just dated myself. Hey, send me a message, put a post out there, a reply out there on the video, if you don't know who Magilla is. I'd be interested, because I think I just really dated myself. And those of you who do, and just sit back and smile. Or you can say, yeah, I remember Magilla, if you don't mind dating yourself. But you see, that's it. I mean, right here just shows you what can happen in trading. You get the trigger, and then it goes against you. You're going to call it a whipsaw. So you stop out, you reverse, and there's just a couple of pips. It comes back down. You wait. Then you see you get this spike here. You can more than make up for your stop or just flatten it out. It comes back down. It hits it, starts to go the other way, and then the nice drop. Chances are you probably would have either taken your profit here or here and been out of the trade. Or if you just wanted to ride it, then you could have made a nice, huge profit. Because you could have exited half the trade here and then let the rest ride and see what happens. Remember that. You can always take off part of the position. So, fellow traders, feedback or failure, it all depends on how you want to look at it. Because it's not what you trade, it's how you trade it. So get out there and drain the banks like a pro. TheRumpledOne signing off.